The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And we're going to start out the show today to talk a little bit about what's going on in the Asian markets with Hong Kong, with the rioting that's going on over there. I don't know if you've been following it or not, but it's a considerable problem over there. They basically shut down the inner city, the area around Central and also Admiralty Way and places like that where all the shopping is. There's somewhere between 50 and 60,000 people that are rioting because they want full referendum votes. In other words, they want full votes as opposed to what they're getting now, which is about 15%. It's pretty much run by China because it is a Chinese territory, but they're causing a great deal of problems over there, you know, with rioting. I have to tell you a real interesting story, a family story here, is that I think I've mentioned this before on TFNN, but it deserves mentioning again. My Uncle Paul was in the Army, 5th Army, and he was with George Smith Patton in the campaign all through North Africa and Italy and also into Europe. He spent his whole career with Patton as a staff sergeant. He basically saw Patton every day. He was in charge of taking notes and keeping track of his schedule. That basically is what he did. But one of his famous, there was a lot of wonderful things that he told me about it, but the one that I think brings into what's happening in Hong Kong now is that they were in Italy. They were in southern Italy coming in from North Africa and going into the European campaign, and they were having trouble with a city in Italy because they were having crowds. Crowds were rioting because they were still thinking that Mussolini was a good guy, which he certainly wasn't. But there were crowds in the area around the cathedral in the courtyard, and there was 5,000 or 6,000 people, I guess, and they were very unruly, and they couldn't get couldn't get them to disperse or anything like that. And Patton said, I know how to disperse a crowd. He said, we covered this when I was at West Point. And they put 250 caliber machine guns on top of each of the steeples at the church, and they fired at the fountain in the middle of the square. And of course, it blew the fountain, everywhere from Sunday, and the crowd totally disappeared. And Patton said, that's how you control a crowd. And I think if they fired a couple of 50 caliber machine guns over in Hong Kong, you'd see how a crowd would dissipate very, very quickly. But those were different times. And but anyway, I do remember that very, very, very distinctly. I wanted to mention one other thing, and that's about the Dow Jones Industrial Average Friday. The Dow was up about 150 points. Half of that was due to one stock, Nike. Because Nike gapped up more than 12% due to good earnings. And you can see what happens when you have a stock, like one stock in the Dow can do something like that. That's why a broader index like the New York Stock Exchange Index is by far, I think, the best way to look at it. Now, the first chart that I've posted in to Tiger TV today is the chart of the NASDAQ. Now, we actually made a lower low today by just a point or two in the NASDAQ. We also did that in the S&P. We've since had a very good rally since that point. But as of Friday and as of today, we've made a ABCD pattern at an exact 382 in the NASDAQ. The number that we hit in the S&P was at 61%, and the number that we hit for the New York Stock Exchange was at the 786%. So this should tell us that we should have some type of a rally this week into Friday. And Friday we have the Mercury is going to go retrograde on the 4th, and Friday is going to, of course, Friday's the 3rd, but I wanted to explain to you the situation that is similar to what happened in 1987. In 1987, on October the 16th, which was the Friday before the big crash, the Dow was down 106 points. The next day, Mercury went retrograde, and of course on Monday you saw what happened over the next couple of days, and we have that same situation occurring now. But in order for this to work, two things must happen. We must hold the lows that we've made today and rally into where we are into Friday, because if we close badly on Friday, this would be the same type of setup that we had during 1987, and I think that would be worth for someone to take a look at it. Now, we'll have the commodity show on Thursday, so we'll have a little better idea if this is in fact going to happen, but I'm not even sure it will happen. I'm just saying that some of these cycles that we're looking at are repeating again once more, and it's something that needs to be looked at, in my opinion. So we'll watch that very, very closely coming in on Thursday on the commodity show, just to see where we are, with this, because it's very interesting, where we stand. The Dow Jones Industrial, it tells us, and this is really, I think, just one second, folks. I got to change something here. I have to make it a little bit bigger. There we go. I wanted to bring up the Dow Jones along with the Bradley model, because the Bradley model says that we're not going to see a really big downdraft until around the 20th of October, and that's certainly possible too. It could come from a lower level. In other words, this move could happen on a lower level. The reason why I think it's important to do this up is that during the 1987 move, I was doing the work on the Bradley model at that time, and it was calling for something very, very sinister. I've posted this chart into Tiger TV from 1987 several times before. Unfortunately, I've lost it due to the computer problems that I've always challenged with, but it was the same type of pattern where the market was basically saying, straight down for 5 or 6 weeks. And that's in fact what happened. Well, it took 2 weeks, because the high was made on October 2nd, 1987, when the Dow made a 61% retracement, and then we came down. We also have a lunar eclipse coming in next week, which is the same situation that we had back in 1987 also. So there's a lot of cycle things that could be happening there, and along with the Bradley model, looking at it, we could have something very, very interesting happening. But with this model that we're looking this year, it says it should happen around the third week of October. So we have plenty of time to look at it. We got all this week to decide, where we stand, and then we'll, take a look at it from that point of view, and we'll see, where we are at that point. So that's what I'm watching here with the Dow Jones. Folks, these markets look extremely bearish from a technical standpoint. No matter which ones you look at, they look very, very suspect. The next one we're going to take a look at, of course, is the New York Stock Exchange Index. And we did make a Gartley as of Friday. We did take out the low by just a little bit today, still right at the 786. It didn't go down from that level. But if we close very badly today in stocks, down more than 200 in the Dow, and at least down 150 in the Dow, then I would say, this thing is getting ready to really come unglued. But it's got a lot of things that are highly negative, with these double tops and all these expanding triangles that we've seen in all these different markets. So it's very important to watch this. And I think the most important thing, without a doubt, is what we've talked about before, and that is the divergence between the New York Stock Exchange, which is the broadest of all indices, and the rest of the indices, the Dow and the S&P and the NASDAQ. Were able to make new highs. The NASDAQ actually double-topped. The S&P made a slightly higher high, and the Dow made a 1.27 expansion. So, but we have not seen a divergence like this, folks. Prove it to yourself. Like Jim Twentyman says, defy human nature. Do the work yourself. Go back and look at when the New York Stock Exchange was lagging this badly. And in fact, it did a double divergence. It did one in July, and then it did another one in September. And this is incredibly bearish. You just don't see that. It's a very rare event, and it means that stocks have been distributed up here. And it's not just the 30 stocks of the Dow or the 100 of the NASDAQ or the 500 of the S&P. We're talking about the thousands that are in the New York Stock Exchange Index that are all cap weighted, by the way. And that's the best way, of course, to look at this. So anyway, this is what I'm watching here. I really believe that we have come into an area where we're going to run into some very serious problems here in the next week or two. We're just going to see what this rally is going to be. The last time we had a rally off, we rallied 5 days. That would be a rally, Monday, Tuesday, Wednesday, Thursday, Friday, coming into Friday. And if we close badly on Friday, then I would say, I would recommend highly to get into the short side over the weekend, because there might be a repeat of what we had happen in 1987. And the number of people that look at this type of thing are, it's very, very rare. And it certainly is anyway. Now we're going to take a look here at the cash S&P index, because we made a 50% retracement in that one, whereas we made a 786 retracement in the New York Stock Exchange Index. The S&P only made a 50% retracement, and we did make a slightly lower low again today, but still within the ballpark of where we were last Thursday or Friday, and so this pattern is still in vogue. If we close below 196 in this cash S&P, then I would say this rally is not going to materialize, and we're probably going to be heading lower. That's the bottom line of what we're watching with that particular index. Now, the next one that we wanted to look at, of course, would be the small caps. And the small cap had a very interesting pattern also, because the small caps held the 786 level from last April. And you can see that, we've already gone below the lows that we made in July. We're testing the ones that were made in August. And so we've had a double test now of the 786 level in the Russell 2000. So it's very important that one holds. So we're really, we're dancing on thin ice here. The question is if we get a rally, how much is it going to be, and will it last for, just more than a few days, or will it be, something that could go into early October, maybe the middle of October, as far as a rally. But right now, it really looks like we've got a chance for a rally here this week if it can hold these levels. I know the news is not the greatest, but that's neither here nor there. So we'll see if that's going to materialize, and we'll see what's really happening with it later in the week when we have more information on it. But right now, it is in fact, holding relatively well. The other one that made another Gartley buy pattern on the close on Friday was the Dow Jones Utility Index. Oh, we got to take a little break here. We got the Dow down about 65, and gold is down up about $2. We'll be right back. Oh, boy.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've put the chart of the Chinese ETF FXI into the den so you can take a look at it. This market has now come down 10% since our September 3rd high that we made when we made the 3 drive to the top pattern. It's down sharply. Again, I don't know if it's related to what's happening in Hong Kong. Frankly, it's my opinion that these young people that are doing this over there are going to really upset the Chinese officials, and believe me, they don't work on the same rules that we have here. It's not a democracy there, so they could really get into some trouble as far as what happened. We can always remember what happened in Tiananmen Square back in 1989. When the students were uprising in the tanks we saw on TV, where the tanks came in and put a squash to it. I don't think they would do that in Hong Kong, but the PLA, the People's Liberation Army of China, they do have barracks all through the Hong Kong area, and so they are there in case they are needed. So this is a very serious situation. As you know, Sarah and I go there quite a bit, and Sarah's son lives there along with other relatives, and we all are concerned about, the rioting and stuff that's going on. It's great that people get votes, but remember, this is it's an outpost of China. And China lets them, operate, under a economic regime different than what is in China. So they're doing it as a favor, and I'm sure the Chinese officials use it too because they move their money there also. Follow the money, that's what they tell us. Okay, that was the Chinese market. So the next one we want to take a look at, I think, of course, is the VIX index that Basil has been talking about, and we're basically looking at the VIX. If we need to get the VIX above 18, we closed around 1485 on Friday. We're up today. So it's a question of whether we can get above that 18 level, and then we would have a pretty good chance of seeing the market getting ready to see what's going to happen, and we will go from that level. The Hong Kong market has been it's under a great deal of pressure right now. The Hang Seng Index is down about almost 2% today, gapped down about 1.5%. It's down about 400 points, as I recall, and it is it topped several weeks ago before this thing ever happened, and I'm not sure what triggered it or anything like that. I just know once I started seeing the tear gas that it was going to be quite nasty over there when they started doing this. So we watch it all the time just to see what's going on. We're praying that no one gets no one gets hit, with this particular uprising that they're having over there, because it is a very bad situation. Now we've had a request to take a look at the Australian dollar on a longer term price objective here, and I'll put this in so we can take a look at it. As you can see, we've broken through the 61% retracement. We've broken through the 786 retracement, and now we're heading down to either a double bottom around the 86.50 level, or we could go all the way down to complete a really big ABCD on the long-term weekly charts that would take us down to 84 on the Australian dollar. So that's really what we're looking at. This move that we've had, since we made the sell Gartley up around the 94 level in the Australian dollar has been, very, very dramatic, and it continues to go down. The key here, folks, I believe, is in that dollar index, because the dollar index has broken a record. I mean, they've taken Joe DiMaggio's hitting streak of 56 games and put it in a record book, because the dollar index has been up for 11 weeks. It has never had an 11-week run ever since they started following the dollar index, which was about 30 years ago. So that's an incredible outlier event. I believe we're trading right near 86 right now, and the dollar just continues to drop, to go higher, and that means the euro is going lower. The euro has a price objective. In fact, we should look at that, because I believe that's going to be a key to some of this. We mentioned this on the commodity show last week also, but if I can just find it here, there it is. And you'll see that we have some cycles that are due right now in the euro. That's nothing more than a 112-week cycle that goes from 2010 to 2012. We got to take a break. Dow's down about 80, gold's up a couple of dollars, and bonds are near the high of the day.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone has asked me a question about, or they've asked me to show the divergence that we've been talking about with the New York Stock Exchange Index and the Dow Jones Industrial Average, which also goes through with the S&P and also the others. But it's really quite amazing because it's you just don't see this very often. I'm going to fix this so we can see it really clearly. We've had two of them here. We had one in July, and then we had another one in September. Folks, the correlation between these markets is about 98%. And when one makes a new high and the other one doesn't, it's a very, very important thing. Now, remember, the New York Stock Exchange Index has come down and made a 786 retracement today because we were lower today than we were on Thursday and Friday. And that was, that's another divergence that's also happening, too. So the folks, I mean, I'm a technician. I don't know diddly squat about these fundamentals. I never have. I basically believe if prices are going up, there's more buyers. If prices are going down, there's more sellers. And I do watch for divergences, like this, because this New York Stock Exchange chart, which is the biggest of all the indices, is certainly showing a double top from the July to September 3rd period, and then with these divergences that we've had where the Dow went up and made a new high, and then the others did not. The New York Stock Exchange did not. You just don't see that. That's a very, very rare event, and that tells you that there's a lot of selling, coming in. All we need now for the market to break is to get down to that below that August 4th low, and that's going to ring a bell on Wall Street. That'll hit. I think that'll turn all the moving average boys down, the 200s and the 100-day moving averages, I would imagine. And but that's the key. What I would be watching for, and this is what I'm looking at. I did okay in 87. I was just scared to death on October the 19th because I was short and I didn't know if the brokerage firms were going to be solvent or not because there was no liquidity in the markets. I mean, it was amazing. Do you know that there were only 13 issues on the New York Stock Exchange that were up on that day? 13 issues out of I think there were several thousand that were traded, and only 13 issues were up. If you went back and looked, all you had to do was to buy any of those 13 stocks, and you would have been really in great shape. And you had to think about that because if 13 of those stocks can be up on the worst day in the history of the stock market, which that was in 1987, somebody had to know something, because if you can buy something when the whole world is falling apart, you have to certainly know something of what's going on. And that's exactly, what happened. It was those 13 stocks that actually were the best ones to own, right after that. So this is what we're really thinking about what's happening. Someone's posed the question, do I think that this is going to be worse than 2008? No, I don't. I believe that it'll be. It's going to be worse than 2008, and I believe we have the possibility of something really sinister happening. I don't know if it will or not. We live in a great country, but the people are so bullish on Wall Street, and they're so complacent with the number of bulls versus the number of bears, the margin debt. All this stuff is just lined up like ducks on a pond. So I would imagine it'll be different. It's probably not going to be like 2008, and it won't be like 1929. I'm just saying that you just want to be able to watch this very, very closely, especially this coming week, folks, with Mercury coming retrograde and the eclipse that we have, which comes in on the 8th. That's the lunar eclipse. So any of those dates, could be the trigger mechanism. But watch that August low in the market on any index that you're looking at. That August 4th low was very, very, actually come in on the 6th, was very, very important, because if we break that, that's telling us that we're getting ready to break really badly. And so I would be, focusing on that, quite a bit to make sure that, that's what you're looking at as far as a potential move to the downside. But, it's already started down. I mean, we really have hit some major support here. Whether it's going to hold or not, remains to be seen. But we should be rallying really strongly. We had a, pretty good rally from early this morning when the market was hit really bad. And, whether that had anything to do with Hong Kong or not, I'm not really sure. I don't think it did, because when we had the Ukrainian problem, the market, continued to go higher, and that's just related to the cycles that we're looking at. The only troubling news that I heard this morning is one of my friends shared with me the fact that maybe the reason why the Attorney General of the United States has resigned is because President Obama is going to appoint him to the Supreme Court. And I don't think Eric Holder is what we want as a Supreme Court justice, but, who knows? I'm not a politician. Maybe he'll turn out to be another William Jennings Bryan. One never knows. But anyway, we do have some serious things going on here in the market, and we want to be able to, watch these very, very closely this week. It's going to be very, very interesting. The gold market and silver markets have reacted modestly. I mean, virtually nothing off these bottoms. They're still within about $6 or $7 of making new lows. And when you look at the XAU index, which we follow quite a bit, it's telling us that there's still a chance that we could have some more move to the downside in this. And I want to post this. If you'll give me a second, I will get that ready for us, and we will be able to take a look at the XAU here. God willing, of course. Maybe God's not willing right now because I can't find it. I thought I had it in here, but must not. Well, I'm not going to worry about it. Anyway, it's making a double bottom from the bottom we made just about 3.5 months ago, and it doesn't look like it wants to bounce, very much from this level. So that's the key of what we're watching. Now, when we get to I want to show you this dollar index because this is the one that is really has an interesting chart. Give me a second to make it a little bit bigger so we can see it a little more clearly. There we go. And you'll see that we have we're up into this area where we have exceeded the 786 by about 40 cents. The ABCD is now complete. We've had 1, 2, 3. This is the fourth major swing that we've had since 2012. So the dollar index, if it's in this area, if it gets much above 86, and we're trading at 85.80 right now, we could easily, go up and take the old highs out from 2010, and that would be up around the almost the 89 or 90 level. So that doesn't mean that the dollar, cannot continue, to gain here. This is just one of those spots that if it's going to turn, this could be it. Now remember, this is the 11th straight week that we've been going up, and that's equivalent to the 11th week. If you go back, that's when we were making the 61% retracement in the euro up at that 139 level. That's when we were completing the bearish-Gartley up in that level. So this market is very, very overbought in the dollar, but that doesn't mean it can't continue to go higher. I mean, it's just happens to be heading higher. That's basically it. Now, the other one that I think is important here is the Japanese yen, because it has a clear target that the Japanese yen wants to get up to around the 112 level. We're trading at 109.5 today. So we've got some more to go to the upside, but this market has done everything to tell us that it's wanted to go higher, and it continues to move in that direction. So we'll wait and see. Someone asked me a question about Alibaba. I know about as much about Alibaba as I did about Facebook, which is virtually nothing. They brought out a lot of stock, and they turned over the whole float in one day. I think it was 200 million shares, so there was a lot of selling and buying that first day. So I don't really have an opinion on it. I wouldn't have bought it the first day. I would wait for a really clear pattern, and that'll take a couple of weeks for the pattern to unfold, just so you have enough price data to look at. You don't want to stand in front of something that you know nothing about, which is part of the problems that we have in some of these markets. So you've got to be, very, very careful, when you're watching. The one that I am watching for the currency that I think is very, very close to having a turn of some kind, and that is the Canadian dollar versus the U.S. dollar. We're up in this 111.50 area. We had a couple of ABCDs that measured up to 111.75. That's a difference of 20 pips, which is $200. But we've been up for 9 days now in the Canadian dollar, so it is due for a pretty good correction. And believe me, when these corrections come in these currencies, they move very quickly, and so they can move several hundred pips and still be in a bear market. I mean, you could have the euro move up to 129 or 130, and that's just taking care of a very grossly oversold condition. So you want to be very, very careful of these as you're going through to watch them. So it's important to watch the shorter term time frames, because they'll sometimes give you a really clear pattern to tell you that you're knocking on the wrong door, and you got to be really careful at that time if it's going to be a big change to the upside. But frankly, I don't see that. I am going to put up the dollar index, the XAU here, because we are taking out the lows that we made last May, 5 months ago. The market is making lower lows today. So that tells us we've still got more to go to the downside, and I believe that we are going to be looking at a little bit lower prices in both gold and silver. Both gold and silver have been unable to rally to any extent at all. Silver is up about 8 cents today. Gold's up about $3. But when you consider how much they've come down, that's really not much of a move. Copper's up, just a little bit. But the rest of the markets are, under a great deal of pressure. I'm not going to mention the commodities too much, but the cattle market just keeps going higher, folks. Get ready to spend a lot of money for beef because we had these cattle at 162 today. The last time I remember looking at them on a low was at 42, so they've gone up 4 times in the last 5 years. So that's a tremendous move in live cattle. That would be equivalent to gold going up to about 3,800, I believe. So let's see, from 800 to 4, it'd be about 3,200 in gold. So it'll be quite interesting to see when this cattle market does turn, and if it does, and they always do. Nothing goes up forever. We'll have a handle on that using our friend Rich Anderson from Anderson Capital Management, who also happens to be a cattle rancher, along with being a wheat rancher and also sorghum. Okay, one other question someone has asked us in the den, and that is related to the crude oil market. That market has actually held up relatively well given the debacle that we've had in some of the other markets. As a matter of fact, if we're looking at it just over the past couple of weeks here, we'll pull this up so you folks can see it. We're making a really nice Gartley pattern in the crude oil as we speak today, up around this 94 and change level, 94.20. And we've completed a 3 drive to a top pattern over the last 5 days, and we hit the 786 of the high that we made back on September the 16th. And the thing is about the crude oil, though, is if we look at the daily basis in the crude, the longer-term chart, and I want to get this on a weekly chart to show this because this will be a trade that you really want to keep in mind here. I'm going to bring it up so we can look at it so you can see where the market came down from, and we'll take a look at it. That we did hit the 61% retracement down here at $90 a barrel. Now we're starting our first little move. This is our third up day, and we'll be able to see what's happening. We've got a caller in today. Hey, that's good. We got a caller from San Antonio. Chris, are you there?
Yeah, I'm here, Larry. How you doing?
I'm good. What can I do for you?
Hey, Larry, I'm short the IWM, and I wanted to ask you, it looks like it's going back and testing the low from, and I just wanted to see what you thought about that.
Well, to me, it's, we made that double bottom down at the, that I posted into the den a little bit earlier. And that double bottom came in around the 110 level. If we ever get below that, you're looking at some really seriously lower prices in the IWM. What I would try to do if I were you, Chris, is to watch the quality of the rally if we get one this week. Because if we don't rally much, that's telling us that this move that we're expecting to the downside is starting a lot earlier than we thought. So I would give it as much room as you possibly could to the downside. But stay with us till after the break, could you please? And we'll talk about it a little bit more.
Okay, thanks.
You bet.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we're talking with Chris from San Antonio, Texas. And Chris, I posted into Tiger TV the current price of the IWM, and as you can see, we've made a double bottom to where we were last week at that 110 level. We're still we're down a little bit on the day, but really not very much. So you might have to set with a little pain here if we get at this rally, but going below that 109 level, boy, that sets up prices below par. I mean, it should go well below 100, which would be another 10% down in the IWM, and it's very, very weak. If you notice, it's a tremendous divergence compared to the New York Stock Exchange or the Dow Jones or the S&P. It's very, very weak. So when it goes, it should go faster than the others, if in fact it does. But with this double bottom we've made here at the 786 level, we've hit it twice now over the past several months. We could get a little bit of a bounce from here, but between you and me and God's ears, I'm not even sure of that. So if it were my position, I would hold it. because I would like to see what happens this week, because if the rally is not much this week, we're going down really big time into October. It's going to be something pretty nasty.
Okay, well, I appreciate that, Larry. One other question I have for you is, I know that you were the broker for Gene Roddenberry and Captain Kirk.
Yeah, I was. Yeah, I sure was, yeah.
I wanted to ask you, do you think that Captain Kirk has finally sold all of his Priceline shares?
No, he wouldn't sell anything. I can tell you that. He is just he's a long-term investor, and believe me, he does not need the money. He enjoys doing the commercials, quite a bit. But he certainly doesn't need the money. He lives he doesn't live in mansions like the rest of the movie stars. He lives in a beautiful home he has horses and stuff. But he lives a really relatively modest lifestyle compared to what people might think that he does. But believe me, I know he does. Well, I don't know, but I would assume that he would still own the stock, because he wouldn't sell it. He has no reason to sell it. So that's my guess. I think it's worth well over $150 million from what I heard from somebody on one of those sent me an email that's what they thought that the value of the stock was worth, because he never was paid in cash. They always gave him stock at Priceline when they first started out, and so I would almost I would bet 9 out of 10 times that he still has all the stock, because he really doesn't need the money. I mean, he doesn't spend very much, and what is he going to do with it?
Okay.
The other thing that makes me believe that he still has it is he's still doing the commercials. And if you remember, 2 years ago they basically booted him out, and it caused such an uproar they had to bring him back. So now he's doing it.
I never heard that. I didn't hear about that.
Yeah, he was replaced. The negotiator was replaced by somebody else for just a couple of months, and that didn't last very long. And then he was brought back, and he's actually bigger than ever. And they're very, very entertaining commercials. I mean, they really are. And he's really a super guy. I mean, he's just as nice as if you ever met him. He's just the kind of guy you'd want to know more about Chris than you'd want to know about him. Do you have a family? Where do you live? I mean, he's just a nice guy. He's he's just a super nice guy. Gene Roddenberry was the same way, but Gene Roddenberry had a Napoleon complex because he was so short, and he had a tendency to be a little abrasive at times. But he did not do that. Bill Shatner was certainly not that way.
Well, I'd read some things about Captain Kirk, and basically it said that after that first year, he was living in a van by himself. Because he didn't have any money.
Yeah.
And I thought that was pretty awesome,
Yeah,
right,
you made it
Larry.
big. You bet. Thanks for calling in, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.